Okay, good morning. Hey, there's really inflation. Can you imagine? I would have thought it was transitory, according to the experts. It's not. All right. So, Stevens long this ES trade doing nicely. Why did it bounce? Look to the left. Right? Right? Drop. Look to the left there. You can see there. Prior lows. Buyers come in. How high can it go? Well, I don't know. But it came down so hard. It's got this void up above. So 3,800, maybe that would be a home run for you, Stephen, if it gets there. You've got I switched this from the 2-minute to a 15-minute there. I like that price action with that dip down bottoming tail bar and move back up. So moving up there. So futures came down to the prior low and buyers stepped up there. No surprise. Right? Spiders. There's my little SPY there. Bouncing up a little bit, came down to 374-ish. Obviously has to be the prior low. That's where the futures were. And silver down. Yeah, it makes sense. I mean, look, we talked about this earlier in the week. We've been talking about this for weeks, right, Hilda and everyone. The 3-month interest rates, I said way back here, right, in 2001, I said, keep an eye on this. I said, if this starts to flip up, the party is going to be over for the broader markets, right, with interest rates starting to go up. And the Fed, this is the period where it was being ignored. People were saying the Fed's behind the curve. Fed chairs, it's transitory, so on and so forth. Right now, it's very real. Anyway, it continues to go up. And with that, the intermarket relationship historically is the dollar is going to go up. And if the dollar is going to be going up as aggressively as this is, well, silver and gold really don't have a chance in hell. So once gold gets down here, right, to the 1680 level, which it's bounced from before, maybe the dollar will have run its course or maybe not. And this will drop down. And, this is just a level to be aware of. Maybe it'll stop there. But if it doesn't, right, well, you'll see the price action over here. Do you get a breakdown failure? Do you get a W bottom? Right. So as we see something to the left, and it creates the thought there's going to be buyers there. From there, the next thought is, does a price pattern evolve that supports that belief that there's buyers there? Then once we see that pattern develop, we can say, okay, now I can take a trade. That support has been created, new support has been created, and we'll see where it goes. So I'll be talking about that and a heck of a lot more tomorrow at the 365 event. If you're not signed up, you might want to sign up because they don't send recordings. Well, their thing there is to pay them a VIP membership and you get to see the recordings. So, but maybe spend an hour with me tomorrow at 3:00. All right. So we see where the spiders are. I know, McGraw. So, make up an email address, quickdrawmcgraw@hotmail.com. Get on the thing and never go back to the email address again. Everybody says that. And then, you know what? I send out these emails and they tell me, oh, Greg, can't you get more people to sign up? I said, people spam them too much. They don't like you. I said, some of them will, that I'm sending this to that know me, they'll sign up because, I'm presenting there, but they don't want to hear about, a gazillion indicators and then get a million emails. Anyway, that's their thing. They get a big crowd there, so it's all good. It's there's whatever. Okay, so little bounce. Maybe I don't know if it's ended there or not. Anyway, it's stalled. So the thing to watch in a situation like this, it's short term. So, looking at the 2-minute, as this goes up, once you get a little breakout failure, that could be trouble. Maybe, right? Could be. There's no pivot here to rely on, but you don't want it to go below here. And for scalper trades, I mean, I wouldn't want this to come all the way back down there. So that's where the trading gets rough, meaning you've got a profit. I assume, Stephen, you entered here or here, and you've got a small profit. Maybe it can keep going. You get some negative bar. Do I take my money? Do I step aside? That becomes a personal decision. But it shouldn't break below here anyway. Maybe maybe you can keep, moving up there a bit. Okay, so it's bounced a bit there. And so figure SPX is going to be around here. We go look at XPX. It's already 100% retracement back down to the low. Early in the week, this was our level and it held yesterday. Now it's done. It's down here. Somewhere between 37.24, 37.50-ish. And now we go and look at the option table and see, is there some huge premium way down below? Woohoo. 36.80 is 70 by 90. It's probably give me a second here. Never. Okay. So 36.80. I like that. I liked it. I like it because there's an open gap down here. And so opening here, it's moving from, the gap down. There's buyers here. I'd rather a bit lower, but maybe at the open, sellers come in again. That happens a lot, for a secondary dive where it goes down below the pre-market low. And that would be the spot to initiate that put spread with lower premiums, maybe down here. It may hold. We'll see. We make an assessment and then we have to see what's going to happen there. So I'm just looking on the weekly chart. Depending on where this ends the day and week, we could be looking at what I've been hoping for is an initial move down here into this green area where this large overlapping congestion area is. And I think that will be that'll be the destination for the end of this down move, at least for some type of substantial move higher, some stabilization level. So, and Microsoft getting shellacked yesterday as it did, that may be a precursor, an institutional loved stock, wide range bar like that. And remember, this thing topped out way back here, and it's been going down for a while. So, but that was a pretty nasty bar yesterday. All right, let's move on. 36.55, 36.55. Well, it's only 15 by 30, but yeah, I mean, if we do get a downdraft down there, so I didn't even look at the upside if there was any premium. Just figuring that there wouldn't be. $38.70, $75. That is probably worth I think it can worth the consideration that it's gapped down here. So when we look at the bars and look at patterns, okay, it's gapping on support. If this rallied, it could come into the gap fill, right? That would make sense. But to get up to 38.75 from down there, I don't think so. All right. Okay, let's think about that. Okay. Let me get done here. Yesterday I was running late. Took Dan's time. Where's my mouse? See that those counter trend trades, they can reverse in a nasty way pretty fast. So 280, all right, coming down here where we marked yesterday, this little zone gapping down there. It's gapping on support. So it's not doing, it's gapping down. It's a big gap down, but it's really not, it's not gapping in a really significant way, meaning, all right, percentage wise, it's probably relatively big, but it's gapping on support and holding there. It's not as if it's gapping down below support or way down here. It's more or less gapping in the middle of this range. If we look at that range, you know, in between here. So something to consider. Yeah, see, could make a higher low. I mean, they're selling, and we'll see what happens. I'm of the thought that look at the open, it'll make another down move, and from there, that's where scalpers will want to step in, you know, and maybe if this continues down into like 950 to 1010 around the other first reversal period, it bounces from there. That is definitely a thought for a short-term scalper trade. Wouldn't be a measured move. Well, see, a measured move is one in which, say, a scenario like here, Robert, it started to flip up and then immediately flip back down again. And then you get the measured move lower. That didn't happen. So if today had a reversal, another one, measured move is essentially prices come down to an area of support, whether real, this is real, or subjective, meaning it could be a moving average. It reverses and then immediately fails. You know, McGraw is sharing with us that if the open interest puts at 3,800, which we know prices are about, go from in the money to out of the money. Well, aren't they? Okay, they're in the money. Good, they're out of the money. You mean if it comes back up above 3,800, McGraw? Oh, yeah. I mean, that's a hell of a long way to travel. But if it came to 3,800, at that point, I don't think there'd be anything to stop it from, you know, moving into our ever resistances, you know, in here. So, I mean, 3,800 is where this attempt was to hold thing. So, you know, when you make those thoughts based on option analysis, right, open interest there, and getting through this level, you look at the chart, and this is one of those situations where I'll tell you this doesn't matter. And we talked about this the other day, and it's like, yes, at that point it could rally up to here. Yet to be seen, but just pointing out, because of the structure of this chart here, that certainly could happen. But well, let's see what evolves here. All right, let me continue here. Well, kind of making a higher low. That's what I'm saying. Like, I think this little bounce, it's got to roll back over. And the way I look at things, you know, looking to the left, it's like, where would I want to buy? Where I would want to buy is where every algo, short-term trader, hedge fund that wants to scalp the futures is going to want to buy. Same exact place, right? So no secret levels, no proprietary numbers. Look to the damn left and you see this whole, that's where the buyers are going to be. And then we'll just see how they show up or not. They'll show up. Whether they hold it or not, it's another story. Bitcoin, right, got above the high, now all the way back here. All those buyers got to be sweating a bit, and you want to keep an eye on this, because if this starts moving down below that 18,000 level, there is nothing to stop it. And it really could start cratering because there's no support here. There's just a void down to 10, 11,000. And same story. Where would you want to buy it? Looking at this chart, if you understand support and resistance and voids, everybody's going to say down here. Right now, does it have to? No, but it has to create support. Which is it creating support here now? Maybe. Maybe there's going to be buyers here. Let's see what they can do. Bitcoin is now correlation with the Qs. Bitcoin's been correlation with the broader markets since November 8th of last year, Tony. I pointed that out a long time ago. So if you go and look at the top, right, and you go and look at the pattern here and go and look at what happened. Go and look at what happened in individual stocks and the broader markets. All right, look. All right, so this is where it starts chopping around, and then eventually it rolls over. And looking at the Qs there, pretty much, right, the same story. What's going on with my computer? There we go. Blacked out there for a second. I don't know why. All right. I'm taking too long here. We looked at gold. I talked to you about the euro a week or two ago. Looks like it's going to continue to go down. Transports, just hanging out there. Dan mentioned to me last night that the fact that airlines were holding up there. And I was like, okay, maybe, but not aligned with the market. You know, could they be leading? Maybe some bottom, we'll see. If this is going to gap down below this low here, I don't know if this is real. You know, it's gapping down. So let's see how this thing evolves. You know, for short term, we're just waiting to see prices. You know, this is down here at support. We'll see the broader markets get down there, and you know, we see this has already begun to roll here. So be nimble. Let's see where this all ends, and we'll do what we do every day. All right. You, Dan.
Sounds good. Yeah, I'm looking for these lower lows too, but I just said, hey, 30-minute high, or, you know, as we always do, downside shakeout. We'll be looking for 0 DTE spreads. All right, we got longs and shorts on. So obviously the shorts are doing well. Their call spread's doing well. We'll have to use 30-minute low on a couple things. So any questions on opens, just ask. Otherwise, I'll go to see what I have over here, which is not much. There's 1 or 2 or 3 earnings today, but otherwise, I think earnings will start kicking off with banks tomorrow. All right, so this is actually still a posted trade. It's a bio. And so, Greg, look at today. Today, MT Live is trading classical patterns. How do you read that daily and weekly?
Well, I wouldn't call it a classical pattern. I'd call it creating support after a momentum move. So really not classical, but
well, I would throw it in the category of it's a rectangle. Here's our flag pole, and it's not a flag. It's not a triangle. It's a square. So, you know, but that's today's MT Live. We're going to show you how, you know, those names are nonsense unless you put them in the context of our overall approach. But yeah, this looks fantastic. You got a big red bar ignored. You got holding the upper 50%. You got a bullish weekly with a void, target 25, 27, whatever. I see one print up here at 24. I don't know if it's real or not, but yeah, this is still a posted alert for our weekend letter. I just, when you were talking, I saw a little Kodak here. Do you remember we used to trade this guy, Kodak? And this, the Reddit boys got, got a hold of it here. Wow. I haven't heard of the Reddit boys, power lately, but I saw it perking here pre-market. Oh, Greg, I just saw the title of your YouTube. I love it. Inflation's real. That's news to the Fed. Yeah, Powell, I guarantee you, was not having a good morning. I mean, we know, or probably yesterday morning, because, he obviously gets the reports ahead of time. But he has a bigger problem on his hands now, But Kramer, I actually agree with Kramer today. He was talking about, he's like, look, this thing was done at the height of it, and commodities are coming down. You can't read this report in isolation. You got to look at reality. Look at all these commodities down, used car prices down. Yes, housing's still high. So he admitted that, even though the Fed doesn't. Food prices, I guess, coming down. Look at corn, wheat, etc. So, Kramer doesn't believe in the bearishness of today's report. And I agree with that. I mean, commodities are coming down. But anyway, we're pattern traders, and give me a setup. And like Greg said, let's make those new lows, get a reversal, internals at extremes, and yeah, I'm all in. I'm all in.
If he had some mojo, he would just raise the rate 1 point, and he'd probably be done. But he's too political, as every one of these Fed chairs are. But he knows what to do. Don't discount these people as being stupid. They know what to do.
Oh, 1,000% agree with that. Of course, I agree with every word you just said. I do. I think a 1% would be enough of a jolt, and then the slowing economy would take care of itself. Actually, the news was saying there's a 30 to 40% chance that the Fed futures rates were just rallying pre-market of a 1 basis point raise. So, all right, somebody asking about now. We did a 400 put spread for Friday. It is ugly. This was one of those trades where it's just down a lot, and we did it way out of the money. It is down here pre-market, but you're asking a question. Okay, what do I do with it? And as of right now, there's nothing we can do with it. We got to let it play out. The support is way over here. It's down a little. We'll see if we get a bounce. It's not a pattern to do an adjustment strategy, so we got to stick with it unless it's causing you pain, and then pick a level and reduce exposure. All right, Twitter here, I just saw positive. This is going to be a total, poker game with Musk. But if the premiums were big enough, and I have not checked them, it could be worth an out of the money put spread, just under the guise of, Twitter's going to get money either in a lawsuit or the deal will go through, whatever the case, and just pick a low enough number, and if there's juice. Thomas, MVIS. Well, Hilda, I see your point about he needs to be Volcker, and Kramer was disagreeing with that. He says no. He says this is totally different than Volcker, where we have 15% rates. Let's see. No, this is so that today's session again. That's a small bull flag, Thomas. And so you're right. A few more days of consolidation, and you all know what these two middle charts are, because I only need a little snippet. Look at a weekly bottoming pattern, and the monthly is a Climo retest. So the answer, Thomas, is yes, it looks fantastic. So let's put it on the list. And as you say, let's watch it for a few more days, but it looks fantastic. WYY, there's no volume here, but it's perking, so something's up with that. Coin, it could be a call spread, it's potential bottoming pattern, but having trouble. Expedia was posted in the weekend, not weekend letter, right? It was, I posted it yesterday. So this is a short watch and also a call spread watch. Zoom's a bear 1, 2, 3, but not a swing short because you got all the support, but call spread. Today's Wednesday, call spread over Monday's high if there's any juice. Pets, retest popping. We'll come back to it. A-pin, another one, bottoming pattern popping. We'll come back. DWAC, we had a nice short put on the gap Monday, and we took our money. But let's see how it retraces in here, and then I'll be looking to do another put spread for next week. So FT has some comments there on commodities. To avoid economic shock. Well, I will come back and talk later, but no, I disagree with that, FT. I think he should have done, a point at last meeting. And what's wrong with a shock? If you're so friggin' behind, a shock is good. If you have a swimming pool, here's a great example. You got a swimming pool full of algae. What does the guy do? He shocks it with chlorine. You don't do it gradual. So that's a great analogy I just came up with. All right, uniform, it was a potential bottoming pattern. And now look, it got whacked. Wow, this is ugly, ugly, ugly. Now this, when I see a gap like that, I just 95% think that it's a bio. IS, another little bottoming pattern. Looked like it might have been heading to zero, and something's sure up with that. And that's the problem with shorting. I personally don't like shorting stocks under $7 unless it's a day trade, because here's the risk: they get so cheap that they could be buyout candidates for somebody. Riven, there was an article in the journal that said their quarterly loss was 4 times what was estimated. They said 1.6 billion in the first quarter, but based on the weekly, we're technical people. If this weekly still looks like this with their loss 4 times estimates, guess what? It's priced in. All right, so that CERT came down, so that gap up was not real. I'm gonna put old Riven. We were trying to short naked puts on this, and we didn't get filled, but maybe on this little pullback we will. All right, there's our now. Yeah, it looks bad. It looks lower.